The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the August 6th wonderful Wednesday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a terrific Tuesday. Let's make sure that you and I, that we do all that we can do to have a wonderful Wednesday. I'll do all that I can during the next couple of hours, and we'll take a look at different technical tools. We'll take a look at the lightning bolt pattern, the A to B equals CDs. We'll take a look at Fibonacci retracements and expansions. You know, the combination of both of those are what create those Gartley and butterfly patterns. We'll certainly take a look at Japanese candlesticks because, you see, the bulls and the bears, the sign workers of the market, they have to go to work each and every day, and they'll leave signs for you and I. We'll use all of that to help identify where price is likely to head to, where it'll find support, where it'll find resistance. This is an interactive show. That means you can give us a call at 877-927-6648. Welcome all our new viewers out there. You know, if you're a eSignal 12 user out there, you can watch this. So you can create a little window. TigerTV is now in your system. It's really 24 hours a day, but it's 10 hours a day of live programming as we kick off the Hotel California. Check-in time here at the hotel is 8 a.m. as our man John Logan kicks us off each day now with a show called the Global Market Pulse. So we go from 8 a.m. till 6 p.m. each and every trading day. So it is wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, if we take a look at the futures market, we've got the Dow trading down 55 points, trading out at 16,310. S&P futures are off 7.25. They're trading at 1906. NASDAQ futures down 23 points, trading at 38.48. Russell 2000 off about 7 points, trading at 11.11. Big move. Well, you got King Dollar. U.S. dollar index is up about 6 pennies, trading at 81.68. But the big move in the market this morning, well, you could say the big move is the futures, the index futures to the downside. But you've got Goldilocks has awoken. I don't think awoken is a word out there. But what I can tell you is gold futures are trading up. $21 specifically. They're trading out at $13.06. We'll go take a look at that. Silver's up 13 pennies right now. It's trading at $19.95. Light sweet crude up 28 pennies at 97.66. A quick peek across the globe out here. We're going to see that our friends in Germany, they're struggling this morning. They're off over 1%, down 1 3/10% as we speak right now. Off 121 points. The FTSE down about the same, about 1.25 points, 1.25%, I should say, down about 83 points. It was a sea of red in Asia last night. We'll take a look at our three Asian indices that we follow. The Nikkei off 160 points. That was 1% to the downside. The Hang Seng off only 1/4 point, down about 64 points, 1/4%, and the Shanghai down about $2. So somewhat unchanged out there. All right. So we need to look at gold. We need to look at the index futures. And let's start off here. Let's take a look at the Dow. And let's try to get a feel for where we're at on all different time frames out there. That way, each of you that manage different portfolio baskets can understand exactly where we're at. Now, I've got the Dow futures. In the morning session here, the first hour, we take a look primarily at the futures, at least before the open, to get a gauge as to what's going on inside the market. So as we take a look at the Dow futures, very important pattern here that was formed in the month of July. So that July 31st trading session really put a world of hurt, a world of damage inside of the market when we take a look at chart patterns. If I take you all the way back here into the time period of the highs that were formed back in 2007, what I can tell you is they made the exact same pattern that is underway right now. And that is where we've made a higher high. We've done it with less relative strength out there, and then we've had a reversal signal. Now, for the month of August, what you need is follow through to the downside. Hey, we're only, 6 days into August, but right now we're seeing it. What it needs is follow through to the downside, some type of confirmation. We got a bearish engulfing key reversal session. We cannot forget that. That was the same thing that we experienced. Now, we didn't get a key reversal session here inside of the Dow back in 2007, but you don't need that. That just happens to kind of add a little oomph to the fire out here. The trend on a daily basis is still to the upside. So still in a super strong trend, But remember, things are going to change quickly, or more. They're going to change. They're going to change earlier on shorter-term time frames, like weekly, like daily. That's why we're going to take a look at a little bit of everything. But what we must recognize, what we must notate, is that the Dow has given us the same type of reversal signal that it did back in 2007 out there. And at this stage, the trend is still to the upside. What does that really mean for your long-term capital? Please use stops. Use some kind of stop out there, especially if you are tied to the Dow. But we'll see. We've got similar chart patterns, not across the board, and that's what's unusual, not across the board, but across most of the board out here. Now, that's the monthly chart. If we come down, we take a look at the daily chart for the Dow futures. Again, the same pattern that was out. I'm going to blow it up. I don't need to go back to 2000 and 2007 for you. But you can see on a weekly basis, we're now into the red zone out here. The red zone using the Rhodes Momentum trading indicators out here. The red zone is the sell zone out here. If we take a look at where price has fallen to or where it's headed to, whoops, didn't mean to pull it back that far. If we take a look where price is likely headed to, well, it's likely going to come down and visit this hammer candle out here. This was a session from February the 7th. The low of that hammer candle and the high, I'm going to give you both. The low is 15,276. That's a number you want to write down on a pad of paper. If you see the Dow futures close below 15,276, there's an expression that I love to use, and that's when you close below the low of a hammer candle. If you are long, you are wrong. That would mean you would not want to be long the Dow futures. So if you were looking for a spot for your long-term funds, and if they were tied to the Dow somehow, well, here's the number that you might want to consider using. And again, that low out there is 15,276, because a hammer candle is very important. It's a very important trading session. In this case here, it happens to be the weekly session. If you take a look at the blue line here is the equivalent of the 50-day or 50-period exponential moving average. But if you multiply 50 times 5, it's really a 250-day, right? Because this is on a weekly chart that we're looking at. So it's just using the average of the last 50 sessions out there. Nonetheless, you can see that price has been above that level ever since we came off of the lows back here in December of 2012 out here. Right now, that number's at 16,090. Breaking below that, which is before you would get to the hammer candle low, that would be a bad scene. So that's what's going on when we take a look at the weekly. If we downsize now, we don't supersize it, we downsize it to a daily chart here. The daily chart is going to show that price right now today is testing the little dotted area. That is the 200-day exponential moving average. Last time price got below that was back here in January of 2014. If we take a look at where there's any friends, any bulls hanging out on a daily basis, well, it's all the way back here on the trading session of April the 14th. And so it looks like that's really the target area, the first target area here for the Dow. Where's that going to take you to on a daily basis? The high is 16,113. The low is 15,881. It's got some support down there. You saw a nice little piercing candle follow through on the very next trading session on April the 15th. And the reason that I say it's got some support, it created a little bit of a base down there. Because on the trading session of March 14th, you'd had also a bullish engulfing candle the very next trading session. So it should have some decent support, out here at about the 15,881. But you're at 16,319 right now. So now you're looking at, another 500 points, give or take. And make sure you do the take on that, because I didn't give you the accurate math out there. So if today we see it close below the 200-period exponential moving average, we're trading at it in essence. Right now, it's 16,332 to be exact out there. That says you're going to likely go down and test those lows. You break the low of those bullish engulfing, piercing candles at the 15,881. Pretty good chance then you're headed all the way back to the February 4th level. So that's what's going on inside of the Dow. Now, let's do one more thing. So we've taken a look at monthly, weekly, daily. Now let's take a look at the Dow. Let's come take a look at the current contract. Let's take a look at the September contract. Let's look at the 120-minute time frame. Let's see if we can find any patterns that are out here. And what we do see, let me go ahead and try to blow this up a little bit on the screen out here. There we go. What we can see is that price right now on a 120-minute time frame is making lower lows and doing it with less relative weakness. That may all change here in about 13 minutes when the floodgates open, but we'll see. When you make lower lows with less relative strength out there, it always provides you with an opportunity of a bounce. We do not have those signals in place as we speak right now. Because this is a 2-hour chart, this next session here doesn't close until 10 o'clock. Could we get a reversal by 10 o'clock? Yeah, we would. What would that reversal be? Well, that reversal would be a close above the 8 a.m. session. That high is 16,338. So in, 20, so in about 40 minutes as we're going off the air. But, of course, we'll be able to take a look at this chart pattern when we do the next hour, the 10 to 11 show. We'll know whether or not there's any potential type of reversal in place. Should we expect a bounce in the marketplace? The answer is yes. Is it going to be just an intraday bounce? The answer could absolutely be yes as well. Why? Yesterday we saw a one-day rate of change in the VIX. Of course, we've been seeing them to the upside and to the downside, but nonetheless, yesterday we saw a increase in that VIX one-day rate of change above 10%. It says we should see a bounce today or tomorrow. 877-927-6648. This is TFNN. This is Steve Rhodes. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures off 55, S&P down 7. Let's take a look at what's jumping and what's popping and dropping in the markets here in the pre-markets. On the upside, you've got N-Phase Energy, ENPH is the ticker symbol. They close at 970. Last trade firing off at 1155, so they've got a nice little pop out here. Looks like they posted a second quarter loss of 7 cents a share versus 15 from a year ago, so cutting that in half out here. Let's take a look real quickly, see where that is going to be trading into it. 1155. It's headed right back to its last swing point out here. Now, this had a nice sign of strength. This came right back to its sign of strength, quite frankly, yesterday. That sign of strength that I'm referring to, wide-ranging bar with accelerated volume. That's the trading session here. Ticker symbol, by the way, ENPH. If we take a look at that sign of strength, 1.4 million shares on July 12th. Yesterday, the day before that came back with 414, 432, and yesterday with 423,000. So it's now going to try to take out its swing point high, which is priced out at 12.19. Getting above that, and that's really the swing point. That's all it needs to clear with more than 617,000 shares. That'll set up an A to B equals CD to the upside. That'll be we'll take a look at the small one. Small A to B equals CD pattern on this equity ought to take price from the June 24th low to the high that we took a look at on July 24th, and the actual low looks like came in on August the 1st on Friday for your C point. 1-to-1 A to B equals CD. If it can clear that 12.19 area, suggest 13.48. So this probably has 13.48 and maybe even 14.56 in it on its next move if it can clear that swing point. To the downside out here, we've got Shire PLC. It closed at 245. It's straight out at 230 as we speak right now. Walgreens WAG wagging the tail of the dog right now. That's taking quite a haircut. Trading at $57. It closed at 69 out there. Let's go see where $57 is going to pull Walgreens into. So down with some volume yesterday. The most recent swing point out here. Where's some volume on this? So the last time we saw a real break inside of Walgreens right here, a trading session of February 11th. The low of that is $61. What did I say it's trading at? 57. It's trading below that. Boy, that's not looking good. So that takes us all the way back into the February 5th. It's going to get down to February 5th very quickly. Let's put this on a weekly time frame here, get a feel for where Walgreens may now be headed to. So it's going to get back to February 5th. If it breaks that February 5th low, let me just zoom out of here right now. The weekly chart, no A to B equals C to the downside. But what the weekly chart does shows that February level. So if it breaks February 5th, the week of February 3rd, the low is 55.27. That's what it's trading into as we speak right now. Boy, that would be a massive break of swing points and a break of a trend out here. The last time we see high, it happens to be down at the lows. That's in June of 2012, and that's at $32, 28 to $32. Got to reassess it, but it does have lows at the bottom that have not been tested out there, and that is on Walgreens. Let's quickly go over, take a look at gold here. Let me see if I can do gold for you. Gold trading up about $20. This is a monthly chart out here for Goldilocks. Well, you can see here the blue thick line, red line now because it's angled down. That is the 50 period exponential moving average. Remember, taking a look at a weekly chart out here. What we can see is that level has acted as a great support and now great resistance on the way down inside of gold. So on a monthly basis, for gold to really break out, you need to see it close above 1358. That's what the weekly chart is showing. If we go take a look at a weekly month, that's what the monthly chart is showing. The weekly chart, let's go see what it's showing. The weekly chart showing that same period, that same 50 period exponential moving average. Again, the red thick line we can see right now, that's acted for the most part as resistance, 1321.90. You get above that, that says, okay, maybe we've got some place to go. And it's really going to be the 200 period, the dotted line, 1388, where you'd really see a breakout on a weekly basis. That would also take you above the March 21st swing point high out here. That's at 1392. That is what we are seeing. What we are seeing right now, we're seeing lower bottoms. We haven't seen higher highs out here. Let's take a look at the daily chart. The daily chart shows the biggest break as we've seen here. In order for the gold to really break out, it needs to get above this old price relative strength divergent top that it formed back here on July the 10th. At this stage of the game, inside of Goldilocks, it really has been the sellers that have been in control of the market. But, at 1307, if you can close above 1307 today, that would be pretty impressive. Real quickly, we'll take you over into the 20-minute time frame. It did have a price relative strength divergent low out here. If we take a look at the Chapman wave on the way up, let's go see where that is at right now. Oh, come on, do that for me. There we go. Let's take a look at it. This is only at peak A. 877-927-6648 with a wide-ranging bar. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's diagnostic box spread analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 55 points. Trading out at 16,375. S&P down 9 at 1911. NASDAQ up 25 points at 43.27. Russell 2000 off 7 at 11.14. NASDAQ 100 off 21 points. New York Stock Exchange down 54. Gold up 24 bucks. Silver up 28 cents out there. I want to go back to gold. I just needed to update my charts out here. So that Chapman Wave peak count out there, I gave you the wrong letter. It's at peak C out here. But let's go take a look at it a little bit further. Let's look at gold here, and let's stay on that 120-minute time frame chart out here, because this is, I think it's relatively important for us, especially with this wide-ranging bar. Now, we need to see how the day plays out here. But as we take a look at gold, 120-minute time frame chart, if we go from the lows out here, and that's on June 3rd, the low that I'm looking at, which is at 1243.50, came in at about 2 o'clock in the afternoon. If we go from that low to the high that we have seen thus far, which is 10 o'clock in the morning during that session on July 10th, as price got up to 1346. Couple of things that we'll notice. One, it broke through. Certainly, we saw gold break through a rising price channel out there. In fact, it broke through it. Price came back to it. This was on the trading session about 12 noon on July 7th. If you're watching this on Tiger TV, you can see my charts. If you're listening on the radio, your mobile device at tfnn.mobi, don't forget, you can catch the archive of this show on Channel 9 on the homepage of tfnn.com. So price came up. It broke through a price channel. Came back and tested it, rejected it, and then continued to move lower. Where did it move lower to? Almost to the tick, the 0.618 retracement level. The exact 0.618 retracement level is 1281. The actual low that we saw during the 2 p.m. session on July 31st, we saw gold get down to 1280.60. You got to love that. What was that, 1280.60, 40 cents? Are you kidding me? On a $1,280 vehicle out there? Now, what we did see, what was nice with regard to gold, was this little bounce out here at 10 o'clock in the morning on August the 1st. Pretty darn nice, wide-ranging bar to the upside. So this is the second one. So we can see an A to B equals CD pattern. I'll draw that in a moment. But what I want to just simply point you to, actually, let's come back here. Let's draw the trend line now. I'm going to draw a trend. Well, let's draw a channel line. Let's do that. Because we had a channel line before to the upside. Now we've got a channel line that we can draw to the downside. So here is the price channel. On the price channel, what we are doing, I'm just trying to look at these oversold areas to really help us identify the bottom of that price channel. But I'm going to have to say it's really right in around, probably right about there. Let me draw that. We'll turn that in a nice red color. So if we take a look at this back, I'll come back here. Take a look at the price channels out here. And what we are now seeing, just as price here broke out above the price channel, broke out below the price channel. Okay, that's the rising one. Came back and tested it, rejected it, continued lower. What we are now seeing is we're now seeing gold trade above the descending price channel out here. Now, will gold come back and test that level? Or will it, just as it did before back here on about July 17th when it had broken the uptrend channel line out there? I don't know. It could. In fact, that would be the most bullish thing that you could see would be gold would be come back, it would test it and reject it and then stay out of that level out here. But nonetheless, what we do want to note is gold has certainly broken out. Now, if you look at the price relative strength, or if you take a look at the RSI reading out here, you can see on the 120-minute time frame, you're in the extreme over-bought condition. So it says, okay, you should see Goldilocks move sideways to pull back at some point in time. Doesn't mean at 9:38 a.m., but that's one of the things that should be expected out here. If we take a look at the A to B equals CD patterns that have formed so far, the A point's going to be that low from at about, 1280.60 from around 2 o'clock in the afternoon. That's your A point. Your B point is the top of that wide-ranging bar at 10 a.m. That's at a price level of 1298.40. Pulls back into a low out here at 12 noon on August the 5th out of 1283. You can see that we're already, it's made the 1 to 1.618 or very close to it, which is 1312. We've seen so far an intra-session high of 1310.60, but it's a wide-ranging bar coming into it. That suggests to me that it actually wants higher price. If we take a look at now retracements, let's do it the exact opposite way. Let's take a look at retracements from this high down to the low that was put in. What we will see is that the, what will we see? There we go. You'll see that it's already made it through the 0.382 retracement level. Let me just go ahead and delete some of these. That way it'll be a little bit easier for you to follow along. There we go. So you can see that the 0.382 retracement was at that 1306 level. I closed it above 1306, 1307, even though I provided you with a lot of data about what the large commercials were doing. It was an indication for me that maybe, I don't care what they're doing, this change in trend could be taking place. So today it closed above 1307, but I want to go take a look at the market profile, and that will take a look and see where that resistance zone is. But right now, what this says to me is you ought to see gold move up to about the 1321 level. That should be normal. That should be natural. That would actually form a fairly good potential Gartley sell pattern out here. But even on any kind of smaller one, even if I came off that wide-ranging bar right here at 12 noon on July 17th, let's go check out, see what that retracement level is. When you're coming into a D point, when you're coming into a Gartley buy or sell pattern, and you're doing it with a wide-ranging bar, that's typically not where price wants to stop out there. So that's what's going on inside of gold. But as I said, let's go take a look at its market profile. Let's go see what it identifies as a resistance zone out here on its daily chart. And in Goldilocks, it's at 1309.80. So today, closing above 1309.80 would go a long way to the bullish case of gold. And that A to B equals CD to the upside here. If we take a look at that pattern, your A point's going to be the low out here on June the 3rd. Your B point's going to be the high from July 10th, and your C point's going to be this low. Came in, let's see, July 31st was 1280.60, 1280.50 actually on the August 1st level. And so closing above today, 1309.80. We're not there yet, but closing above 1309.80 would go a long way to saying that Goldilocks wants to make a run to 1387 or 1416 out there, and that is what's going on there. Let's take a look at silver as long as we're out here as well, because in the case of silver was acting very poorly yesterday, having a nice bounce here this morning. But let's go see if silver was just simply running down to a support level. You can see that wide-ranging bar from yesterday where silver had been acting the strongest. At this stage here, silver having quite a fairly strong day to the downside. Now, what silver did do is it came back to its breakout area, and that breakout area is really in this range here. I'm going to go ahead and draw that on the chart for you. If you take a look at the ideal breakout area coming back to a breakout, you're just simply going to use the low of the bar. That would be $19.82 out here. In fact, let me just do this. Let me get rid of a couple of things on the chart out here just to clean it up just a tad for you. So let me get rid of that and that. That'll be helpful. Okay, so you can see here you get this wide-ranging bar, the bottom of which was from June 19th. The low was $19 and what was it, 1987. I must have drawn it just a tad lower out there. There you go, 1987. So there's your low. You can see price had just pierced through that. The real breakout area, is usually a bar or two prior to that where it was breaking out from. So support inside of gold, inside of silver, support doesn't get really broken until until it closes below, in my opinion, the June 17th swing point low, which is out at $19.47 out there. Now, what does gold, what does silver have to do in order to kind of tag along and follow along with gold? Well, you can see the daily market profile here. You know, it's got to get up to $21.21. But I would say getting back above the $20.44 area would go a long way to saying that the silver would want to begin tagging along with gold and move higher. Now, if we take a look at retracement levels, let's do that as well. And if we take a look at retracement levels off of the low out here from May 30th up to the high that was put in inside silver, this is what we're looking at, which is on July 10th. What you will also see is that what silver did yesterday was it made it all the way down to the 0.618 retracement level. So it's an important level for silver to hold, $19.79 or so, right around there. We'll just call it the low of yesterday. So that's what's headed. That's what's going on inside of that metal. As long as we're out here, let's go take a look at light sweet crude. Let's go see what light sweet crude is doing as we speak. And we'll take a look at the daily chart here. Light sweet crude right now just having an inside day, so that provided us with a ton of information. Still in play out here is the A to B equals CD to the downside. So long as light sweet crude trades below 98.02, and right now it's around 97.80. That's the pattern that is in play here, and that suggests that A to B equals CD pattern would take it down to about 94.96, and that's what's going on in that nice black liquid metal out there. Let's take a look at some things that are moving in the marketplace out here. Right now, you've got the Dow's off about 19. S&P is down 3.5. Was that one heck of a move in about 10 minutes of time yesterday? I was on the phone on a business call yesterday, and looking at one screen, I've got 5 screens here in front of me, and off to the right, I saw something shoot down. It was a very intraday chart out there, and needed to end that call quickly so I could go see what the heck was going on. But nonetheless, leading the charge, the upside out here, it is the Jazzy One, J-A-Z-Z. Used to have a license plate called the Jazzy One when I lived up in Detroit. But nonetheless, that is leading the charge, the upside up $6 and change out here. Caesar Stone, CSTE, we'll take a look at these, see where they're trading into, up $3.69 right now. You've got Molson Coors Brewery, talk about being from Detroit, nothing like going over to Canada and drinking a few Bradors out there. That's a beer that you don't see, at least not here in the United States that I've seen. TAP. TAP is the ticker symbol. They're trading up $3.68 out here. Looks like they're out with numbers generating revenues of $1.2 billion versus $1.18, and net income of about $291 million versus $267 million. Let's go take a look at TAP. Let's go take a look at Molson, see what it is doing. So gapping up nicely this morning. No damage that we can see here inside of Molson. In fact, you can see price doing what? Coming back, in essence, to a breakout area. Let me just remove these from the screen out here. Let me just remove this from the screen as well. There we go. So if we take a look at Molson, really, which is ticker symbol Molson Coors, ticker symbol TAP, and we take a look at the breakout session, where would you draw it? Right here, you see a little gap in between the trading days of June 9th and June 10th out here. If we take a look at that, you'll see that that's exactly where price came back to, right around the level of $67.14 out there. The volume from that breakout, 7.1 million shares, as price came back to test that area, 1.2 million, and yesterday 1.5 million. So not enough to bust it to the downside. This morning, gapping up, volume behind the move, 348,000 shares. So it's got some pretty good volume out here. Now, what is Molson Coors likely to head to? Let's go put those market profiles back on our screen out here. On a daily basis, it's up above resistance out here, so it's got freedom to run to the upside. That says that it ought to go visit the swing point high out here. That swing point is on June the 20th. That has 3 million shares. The price high out there is 75.55. If you take that out, that creates a very large A to B equals C to the upside. If we take a look at retracement levels, we come down to the low from April 15th to the high out here that was put in on June 20th. We'll see that the retracement level just a little bit below the 0.382 level. So Molson Coors, TAP is the ticker symbol, much stronger looking equity than the overall marketplace. So if the markets were going to move higher, I would have to say that TAP is one of those equities that you might want to take a look at. If we look at the A to B equals CD price projection on this, on the daily chart, your A point's going to be April 15th. Your B point's going to be that swing that it's likely going to head back to from June 20th. And the C point's going to be yesterday. And you've come off that C point with a vengeance. And that vengeance says that Molson has a nice little foamy top that it wants to test or move out to, which is right around the $85.90 level. But I could make the case, I can easily make the case that Molson Coors would like to go visit $91 and a little bit of change out there. To the downside, New Skin Enterprises, NUS is the ticker symbol, and New Skin Enterprises gapping down this morning. This may be its third gap. Maybe this is an exhaustion gap. Let's pull this back and take a look at it. New Skin out here, well, no, it's had more than three gaps. 1, 2, of course, 3, 4, yeah. So let's go just simply try to see where the carnage in New Skin is out here. And let's look at the weekly chart, see if we can find any level where New Skin might be Oh, man, is that a nasty-looking stock chart or what, folks? Now, this is a key reversal session. It doesn't get too much stronger than what we just took a look at, what we are looking at right now inside of New Skin. You want to talk about bearish candlesticks out here. Bearish engulfing candles. Here's your key reversal bearish engulfing, which took back, this is the week of January 13th, 2014, and it took back all the price gains that were in place since July of 2015. So it took back nearly 6 months in one trading week out there. Well, now it's done even more damage than that, because you are now trading all the way back into the April of 2013 level. So where is New Skin headed to? Man, oh man, where is New Skin headed to? You'd have to say, hey, you got to use a swing point as a target. New Skin right now trading at 46.50, falling from grace, probably headed to about the 32, 36 range. Right now, we've got the Dow is up 5 points, S&P's flat, NASDAQ down 3. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 14, S&P down 2, NASDAQ Composite off 5, Russell up about 58 cents out there. So let's end the next 4 minutes by taking a look as much as we can. Let's go and take a look at what's going on from an intraday time period out here. And we started off the show looking at the Dow on a monthly, on a weekly, on a daily, and then on a 120-minute time frame chart. So let's come back to that 120-minute time frame chart and focus on what patterns we have out here. And so I've got the Rhodes Momentum trading system up here, all the indicators. Now, these little green boxes that you can see, they're an indication that the sellers are in control. Not until you see the formation of one of these red boxes is there any kind of indication that there's any kind of buying pressure inside of the marketplace. So that's the first thing. Number two, if we take a look at the price move earlier this morning during the 8 a.m. session, so between 6 and 8 o'clock in the morning, what we saw futures sell off from about 6:30 for about a half an hour or so out there. We saw futures trade off. Inside of the Dow futures, they got down to a low of 16,272. Now, as they were making that lower low, they were doing it on what? On less relative weakness out there. So the first indication of a potential bounce, okay, is with the formation here of a bullish candle. We got a bull sash candle going. We've got this trading session here. It's going to end in less than 5 minutes out there. So number one, with regard to potential bounces out here, you've got that in place. You would need to see some follow through during the next 2-hour period of time, and that means by 12 noon you would need to see a close above wherever this close could come into. Again, anything can happen in the next 3 minutes out here. So we're just taking the information as we've got it right now. Now, where is the Dow likely to bounce to out here? The Dow is likely to bounce up. On any decent bounce, it's likely to bounce up into the 16,480 level. So you're at 16,357. At 16,480, just to put it in perspective here, right? You're at 16,357. So that's what, 130 points out there. It's going to feel like the sky is not falling any longer. That's a normal level. Quite frankly, that's the first normal level for the Dow to bounce to. So even if you're short, that's really one of the expectations that you should have. What is that level? Well, if you take a look at that solid blue line out there, that happens to be the 50-period exponential moving average. And that level has acted as a pretty good area of resistance ever since back here in the trading session of around June the 29th out there. Remember, the market really fell apart on July 29th out there. So it's a pretty decent area of resistance. Now you get above 16,480. No, I don't mean 16,481 or 482. You get above that, and then you can say, okay, you've got a larger bounce, potentially a change in trend. You got one of those two things that could be happening. But as we speak right now, even though you got futures off of their lows out here, not until they get above 16,480 is there going to be any kind of indication that it's more than just a counter trend rally working off an oversold condition out there. And that is what the Dow chart. Now, you've got the Dow, and it's really the ES Mini. Those are the two weak links as we speak right now. So let's switch over. Let's take a look at the ES Mini. Let's take a look at the September contract as well. It, too, trying to form a price RMI bottom out here with a little bull sash candle. However, its bounce right now looks like it could take us into the 1928, 1930 level. You're at 1912. If it gets up there another 18 points, it's going to feel like, hey, the world, the ceiling, the sky is no longer falling. Folks, that's nothing more than just a little counter-trend rally as we speak right now. So stay tuned. The Money Masters show is up next. If you are off to start your Wednesday, have a great day. Thanks so much for joining me. I look forward to seeing you bright and early tomorrow morning. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.